is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hey, Tyler, thanks for joining. Sorry I'm a little bit late.
Oh, good. I was just going to email to make sure this still worked.
Yeah, I had a call just go over a little bit, but glad we were able to connect now and just wanted to catch up and see how things are going with you there at Indoshun.
Good. Things are going really well. We have some follow-on commitments that are somewhere between the range of 500 to 1.5 million ready for our lead investor to finalize terms over. So this quarter, it's finalizing that lead investor.
Well, is that your main challenge now? Is just getting the lead investor to move on it, or what's the specific issue you're facing?
We have one that is potentially willing to lead that we're meeting with in person February 20th. I believe that's a Tuesday. But we don't want to count our chickens before they hatch. So we want a couple options up in the air. We just connected with a few angel groups that are also willing to lead out on the East Coast that we have some internal champions with. That'll kind of help move us along. But until it's actually on paper, it's not done. And I know that due diligence takes some time. We had some fundraising goals that we were hoping to hit by March. I'm not sure the possibility of that with where we are right now. And I would like to still stretch goal, hit those if we can, but that means finding the lead investor imminent. And so I think that's kind of the biggest thing keeping me up at night.
Great. And what's the issue with the lead investor? Is it valuation, or are there other terms? Or are they just busy with other things?
Mostly the last part, or ones that we were hoping for, who expressed interest originally in their 2024 thesis, are not willing to still do that in the medical device space. So maybe like change in scope of some of the groups that we now have as follow-on investors that we were hoping that would potentially lead in that respect before.
And I found the VCs in the last market, last year, it's maybe changing now. Everybody was focused on their current portfolio and they weren't really making new investments. I get the sense that the market's opening up and VCs are now thinking about new ones, because I've had some of my companies come back saying, oh, they all came alive and they're now talking to me. Last Q4, they weren't talking to me, but here, January 3rd, they are. And I thought that was kind of interesting that there may be truly an inflection point here.
Yeah. No, I agree. We've been lucky. We've had a lot of interest along Q4, despite, not in moving money in Q4. They were all very transparent about that wasn't going to happen, because at that point, all they had left for the year was, like you said, their existing portfolio. So even when we were having those conversations, they were very open about the fact that we're happy to look at your due diligence room, talk through the terms and all that, but real investments wouldn't come until Q1. And so we knew that was coming. But you're right. There's actually some groups that reach back, because we sent out our quarterly newsletter, which has become like quarterly. We sent it out twice now because there's so much going on that one would just be too much. And that actually got 3 previous investors who were interested, but holding off. They re-engaged us. So they're part of that chunk of soft commitments now that we're just waiting for lead terms to finalize. And what's really nice is one of them matches up to 750. So if we pull in, let's call it the 125, they'll close the round, which is awesome.
Right. And are these lead investors experienced lead investors? They do this all the time, every day, and they have a standard process, or are they angel groups where they're trying to figure out how to do this, but it looks like it's going to be fun?
They have led before, specifically in the med tech space. So that's who we've been looking at. One is a regional angel group. And I'm going to take whoever we can get. I'm not betting my eyes at them. That's not what I'm saying here.
Okay.
One's a regional angel group who would be good. One is a larger group who would be great.
Right. Well, my experience with the angels is that we would often find interest from them. They want to do this. We send them the diligence box or the data room, and then we don't hear back. And then we email them and we don't hear back. And you just struggle with that. I know with VCs and with some angel groups, they have a very specific process. We checklist. We start at the top, work our way down. They send you the checklist, so they have all the documents that they need from you, so what they're doing with it. But angels in particular don't always have that. And so we came up with what we call the due diligence walkthrough. Have we ever talked about that?
I believe we have. I could be wrong, but I believe we have.
Well, the idea behind it is, especially with individual angels who really don't have a process, and they know they're supposed to do their due diligence, but they don't quite know what that is. or they don't know how much should I do on this deal. I get that from most angel groups. When do we stop doing diligence? It's
Yeah.
up, how much confidence do we need? How much of the risk do we need mitigated? And you ask five guys, you get five different answers, so it can be hard to figure out. And so the diligence walkthrough is you give them the box, but then you open it up and you have a Zoom call with them and you walk them through and show them every document in there and discuss it with them. And the goal is to have a discussion so that you surface what questions are in the back of their mind. They're not
Yeah.
taking time to write it out, send it to you, get the answer, and go forward. They're procrastinating, and because they don't quite know, and they don't want to look like they don't know what they're doing either. But the way I do it is I just want to make sure you know where everything is. And as you can see, we have a Delaware C corporation. As you can see, we have 2 patents filed and 3 pending. As you can see, we have break even on our financial forecast in year 3. And this is how we're going to get there. And the purpose of that is they will start to ask you, well, what happens if this happens? What happens if that happens? What do you do about this case over here? What about the market? What about the competition? And you answer those questions as you go. And when you get to the end of the number of documents in the data room, and with the early stage companies we often deal with, there's no more than 15 documents. This is not a long exercise. A Series B, you would have hundreds of documents in some cases, so you really can't do it then. But the purpose is to open it up and walk through the diligence with them, answer their questions and guide them, and then ask them the question, where do you see the biggest risk? And they say, well, I think it's the execution on the software. Okay, well, let's go and look at the team that's doing this. As you can see, these guys have done 4 of these systems already before. This is their 5th one that they're doing, and it's well within their scope of doing it. And oh, by the way, they've already done half of it already. We got a beta out the door. So what you're doing is you're surfacing what concerns they may have and answering them right there on the spot. And then at the end, you ask, do you have any other questions? And they say, no, well, I think you answered everything. Then you say, well, I guess we've done our diligence, and I'll send you the wiring instructions. If you don't have any other questions, let's go ahead and just make the investment now and remove the friction that's in the system, which is usually we're waiting for you to go figure out what the questions are. Well, no, we're going to do the diligence with you, so to speak, and make sure that we get you the answers you need, and make sure you've thought about it. Have you thought about this, this, and then give them the answers for it. So for your angel group, that may be helpful. For your other guys, I don't think they need that sort of thing unless you feel like they have risks in the deal and you want to get in there and show them how you're mitigating those risks. Because that's where diligence hits, is what we think there's risks in these 3 things. We're going to focus on those 3. And so we need more information. Investors every day are trying to look for every scrap of information they can to show that this is going to be successful. And then they're getting scared because, the stock market had a bad day and now they're wondering, do I have enough money to do this? Or they hear about a competitor that's doing well. And they wonder, oh, can you overcome that competitor? And so the key is you have to go and get them more information, and you have to kind of get in with them as to where they see that coming. So that's just one thing we've seen work a lot. And like I say, don't wait for the angel to ever come back and tell you the answer. Get on the phone, go through the box, and you'll get to the answer pretty quick once you get in there.
Completely aligned on that. And I actually really appreciate that concept. And you're right. Not to say that the angel groups aren't doing due diligence, but the 2 VC firms that we're with in negotiations with as well, it's different. It's a lot more robust. But the good news is every time we produce like a new, name it, like report or memo or company style document, because of some of these questions to support the answers, we've got that ready, logged, and available for the next person. So it's not like it's a drain. If anything, it makes our room more impressive. But it is a little bit of like, okay, we answered all these questions. Now we got to answer all these questions. Now we're going to answer all these questions, and so on and so on. But so I am curious, because if we engaged your guys' group right now without a lead, do you think it's possible that we could bring in the first set of the rolling raise of 500,000 by end of March?
Potentially, on average, our companies get 500K worth of introductions, and we focus very hard on angels and family offices. We are starting out with convertible notes and safe notes. Almost 95% of our deals are doing that. Only 5% have a price round, and that's
We're
because
convertible, just how.
right. And we are looking for the lead investor, but you also want the right lead investor. And to be candid, almost all seed deals get closed with a convertible note or safe note because there's just not enough information there to make a in-depth 40-hour, deep dive. When we get, to the next round where we have more revenue and traction and there's more to analyze, well, then this becomes a more meaningful exercise. Doing discounted cash flows off of future, forecasts really makes no sense whatsoever.
Our says we're worth 775 million. So I think we go.
I get that every day. Yeah, I'm worth $1 billion on paper. Yeah, well, so am I. Aren't we all? But the point is, yeah, if you're a guy thinking about putting 40 hours into a deal, would you really spend your time on forecasted numbers and not historical real numbers with margins and growth rates and all those things really happening? And that's why most of this stuff just gets done on convertible notes until we get to a place where there's enough revenue traction that we can start to really make sense of it. And it is a lot of work. If we're all agreeing upon the valuation, I think it's worth now. Well, then they just do the convertible note with the valuation cap at that rate. It's not above 5. I'm in. I'm going to go do this. So I think the answer is yes. We would go after angels. We do a convertible note. And the way we do it is we always talk about laddering it. If you're raising $1 million, the first 500K is on a low valuation. The second is on a higher valuation, because you want to incentivize people to come in on that first half. So you have to show that the second half is going up in price when this first 500K is gone. Now we get the FOMO going is what we do in that case. So we could run a campaign like that. If along the way your guys want to, go through and lead, well, then our guys just can follow along. You never lose them. They just always come in, because we're going to be focusing primarily on angels. The other thing we're doing is we're putting in a hybrid event series. We start in Austin on February 7th, half-day event. 10 companies get to come and pitch to a room full of investors. We're also online with Zoom. And then we'll be doing one a month. We're going on to Seattle, March 7th, Dallas, April 10th and 11th. Just talk to the guys in Chicago. We'll be there first week of June. And we're trying to get the Bay Area wrapped up for mid-May. And that's in addition to the online Zoom calls that we're already doing. We do see a little bit of a drop off in online Zoom, because I think the world wants to, at heart, get back to in-person a little bit. But they like the hybrid. So if something comes up, well, I can still jump on the Zoom. So that's where we see the market going at this point.
Interesting. And I'm curious, so if we did engage you guys and the goal is the 2, and we potentially in our own personal connections generate, let's say, 1.5 of that 2, is there a way to structure the deal where it's a little bit more financially aligned, like what's provided directly from the network?
Well, unfortunately, we can't take success fees because we're not a broker. We do not have a FINRA license. All we can do is get in there and help you get more leads, more investors, make more introductions and so forth. It's $3K a month for a 3-month commitment. After that, you can cancel in writing anytime. For 500K, that's usually a 3-month thing. We do have a lot of other companies raising $5 million, and they're $2 million into it. So, and they've run out of network is the case. Yeah. And so that's when, they really need more of this. We can also go through angel groups. We do a lot of work with that, and think of us as your CFO doing your financial forecast. He's not incentivized on whether or not you raise the funding. He's incentivized on whether or not he gets the actual forecast built on the timescale that you want. So we're doing a lot of that back office work with angel groups, mailers, outreach, setting up calls, and so forth. So that's a big chunk of what we do, which is why it's not a broker thing, is we're really not charging broker prices. I talked to a guy the other day. He said he was a little afraid about putting in money up front. And he had done this with an investment bank before. Asked, how much did you put in? $150,000. What did you get? Nothing. Okay. What do you charge? $3K. Really? Yeah. Okay. So we are really in a different ballpark than the investment banking world for sure, especially on price. And those are West Coast, East Coast prices. In Midwest, that's $100K that they'll charge you for that. So anyway, that's where we are with that.
I can appreciate that. And I know you were mentioning the big portion of the outreach being the individual angels. With the individual angel check size of 50,000 and the raise of 2 million, I'm curious, in parallel with our formal seed raise, we have a WeFunder page up and running. Do you think that there would be interest in your network to push them in that direction rather than the being a part of the cap table as a single entity?
Yeah, I have a fair number of angels that are very used to WeFunder. They ask me when I put a deal in front of them, do I punch this on the portal or do I give it to the CEO? What do I do? I kind of like, seeing if we can pick up a check from them directly because it's a 50K check. When they go to the WeFunder, I find that turns into a 25 or 20, or, everyone else is doing, $500 credit card clicks or $1,000. And they start thinking, well, I'll just put in 15 on this one instead of 50. So we can do that. And we have done that before, and we get money in and so forth. But if you could go collect checks directly from them, and if you want to go and put it into the WeFunder, that's fine, but don't put a Reg CF on it. The thing they'll look at when you have a Reg CF is the valuation and market rate, because a lot of those guys are not. I'm sure yours is, but a lot of those guys are not. They just put whatever number they think about, because a lot of Reg CF investors don't look at that, but angels look very hard at that for sure. Ours do anyway.
And ours is tied exactly to what we're raising on the seed round, and the paperwork of the term that we're talking to with another lead right now for that vehicle, who will sit as the owner of that entity on our cap table. It'll be aligned to our seed round terms. So if, for instance, we close the WeFunder in, let's say, the end of February, and we finalize our seed term sheet in April, and for some reason in negotiations we come down a little from what we're expecting as already the pre-negotiated cap that we agreed with these people on, theirs would retroactively mimic whatever those terms set were.
Right. Absolutely. That makes sense. One thing to do is go out and just, like, if you, to the angel investor, just say, here's a great deal, who wants to be in? And when they say 50K, at the very end, if you say, well, if you want to just put it on this page over here, punch it in, you can. Well, then, the 50K, go ahead and do it. Happy to do that. Then we don't get into the Reg CF world until they're at a place where they're already convinced they're going to put the money in, and then they don't have to go do wiring fees or things like that. And if you need some money on the WeFunder to hit a milestone, or, get you to the next level, you can take the successful angels that are coming in and push it through that channel. Even angel groups could do that as well.
Yeah. And so in respect to our biggest challenge, finalizing that lead, I'm curious, in the medical device space, if you have groups in your network you've seen traditionally lead in that area.
We have, some of them have been VCs in the past that lead. Some have been angel groups that lead. Keiretsu is one group that leads. So if you wanted to go through the Keiretsu process, you could get a lead out of that easily. In fact, that's, the Mid-Atlantic group, which does most of the life science deals. They pretty much, unless you already have a comprehensive diligence report, they're going to give you one, and they're going to make you use their term sheet, and they'll lead the deal for you for sure.
Yeah. Okay. So I'm very interested. I really want to hit that 500,000 raise goal by end of March. And if engaging your group increases our likelihood of doing that substantially, I'm very interested, especially for the price point. It's just selling this as a spend right now is interesting, because if for some reason we're behind, that 9K would be important for R&D. So it's justifying it. So I'm curious as to your thoughts. If we agreed to the terms, let's say by the start of next week, what our next steps would look like, because we have a full due diligence room ready. Our terms are hopefully, according to all of the follow-on people that are interested, very reasonable. So if there is wiggle room in negotiation, that's okay. But it's not like we're coming in saying we're worth $10, $12 million. It's not what we're doing here. And so if we hit the ground running on Monday, what would it look, or on Tuesday, Monday's a holiday, sorry, what would it look like?
Sure. Let's say, I'll send you an email to sign up and put in the first payment. The very next day, business day, we would have an onboarding call. And the goal is to get the intro mailer out in 1 week. So we're going to look at your deck and give you the document. We just need to get core content put up there that talks about the deal terms, elevator pitch, high level stuff, and get your logo graphic, your team on there as well. And then we'll work to get that out the door and start building a list of initially interested investors. 200 to 400 names will be coming out of that. And then that takes about a week and a half to get that back. And then we'll go through that list with you and try to figure out where we think the interest is. For targeting angels, we'll sort those to the top. We look at those who hit the follow button. There's 3 buttons on there: intro, pass, follow. Intro, I want to talk to you. Follow, I want the changes. I would get updates that you have going on and pass them off the list. You rarely get intro buttons on the first one because people are still trying to figure out what this is, but you do get a number of followers. Those are good targets. And then we start reaching out to them with more specific emails, and we invite them to come hear you pitch in our online events. We have a hybrid series going on. So February 7th, we are in Austin. So if you signed up today or Monday or whatever, you could be a part of that if you want. Come to Austin for a day and pitch to investors. We'll be in Seattle March 7th, and we'll be in Dallas on April 10th and 11th. So you have a way of getting in person in front of investors with these hybrid events as well. And the rest are online events. And then we start after about 3 to 4 weeks, we start going through our angel groups, start filling out the application, putting in the data, and start working that channel. Even if you don't think that's going to hit for the first 500, it may be worth it for the rest of the funding or the rest of the round coming through, because those are worth 3 to 500K, if anything, that comes out of it. So it's worth doing. 15 groups are life science specific, and 25 are general groups that do life science. And we do have life science angels and meta angels and digital health and a number of those groups that are in there. And we would seriously look at Keiretsu. If you're raising more money after this round, it is worth going through a Keiretsu process. So it's worth that at some point. We just have to figure it out. If you're in our program, I'm standing up the Keiretsu chapter in Texas. So I could be helpful through the Keiretsu process, leading the diligence and so forth. So we just speed our way through that process if we need to. So that's other things we can do there as well.
Yeah, no, I definitely appreciate the walkthrough of what that looks like. And it's good to know that there's a foot in the door at a potential group that would be interested in leading in this world. I'm not saying in leading our specific opportunity, of course, but in this world. Okay, so I'm very interested. If you want to shoot over an updated proposal, close to making a decision, and we'll have that ready by next week, whether it's a go or no go. I think for me, the risk is low for the price point. If it helps us, phenomenal. If it doesn't, $9,000 at the end of the day, kill an organization. It's not like
you'll probably get investors out of it if they don't hit in the first 90 days. They often hit in the next 90 days. So somebody comes in to make it worth a while. It just, may not be in the first 90 days. It just depends upon how fast we get out there.
Yeah. And even if using your guys' individual angel network, even if we could pull some of those, if there's interest, if we don't have the lead ready to go for the formal seed round, if we could push some of those to WeFunder, we lose about 7% of what goes that vehicle, which isn't the best. But one check from your guys' network that goes into that vehicle that we could pull out pays for 3 months. And so it's a very easy sell. It's just capitalizing on it and honestly moving quickly. If you guys can increase the amount of time I'm spent actually talking to people and getting a shot at generating revenue rather than me doing all the back work for that alone from a cost benefit analysis is on the positive side.
Sure. Yeah.
I think we can do that. Let me send you all of our materials before you send a proposal over. You take a look and you let me know how far off you think we are to active engagement. And then there, in parallel with the proposal, I'll make a final call.
Okay. I'll shoot you the standard email now, and then I'll wait for your documents, and then we'll work on the proposal afterwards.
Beautiful. And I'll get it over. I have a call with the university right after this, but I'll get it over immediately after that.
Okay. All right. Very good.
We have nice holidays, and let's, outside of a 15-minute call, let's catch up just in general. It'd be nice to hear how things are going and just stay connected.
Yeah, absolutely. Well, you sign up. We'll have lots of time to do that as well, but looking forward to it. So thanks so much for taking time.
Sounds awesome. Have a great day, and we'll talk shortly.
You too. Bye-bye.
Bye.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.